right. Thank you, Matthew, for being here, and congratulations are in order. You are a new dad and a new partner of the firm.
Thank you. Yeah, we had a very important delivery in the Reynolds household, a baby girl, and going to be short on sleep this year, but that's okay.
Nice. Well, let's dive right in. Our market report is out, Q4 2025. If you had to sum up Atlanta industrial market in one sentence, what would it be and why?
Great question. In short, I'd say market-wide momentum. Generally across every submarket right now, there's definitely a bullishness I think that owners have to not be afraid to get spaces back. They're, leveraging, across the market a position we haven't seen in quite a while. And so that's material. You feel it, working on transactions. And I think the reason I say market wide is because over the last year, there may be one or two pockets where it feels that way, but really, across the 8 submarkets right now, that's how we feel.
Yeah. And we really did see that demand pick up in Q4. Net absorption was higher than last quarter, and we are seeing demand lead the market again. What does that demand actually look like in your day-to-day life?
If I think about renewals, which is what we're working on a lot right now, there's a ton of footprint rolling this year. More than the last few years combined. And I think about as we're working through those conversations with the owner, we're realizing that they're not afraid if the space is well located and functional, they're not afraid to get it back right now. Most institutionally owned buildings aren't. And so that makes it very difficult for occupiers. And then on the new lease, new facility side of the equation, it looks like much more calculated concessions from owners. So whether it's, they're leaning into maybe a little less abatement, holding their face rate, that's definitely something we're seeing more.
And speaking of renewals versus new leasing activity, new leasing activity was actually stronger than renewals this past quarter metro-wide. And I know we do have a ton of roll coming up in 2026, 2027 of renewal activity. What do you think is finally driving these tenants coming to Atlanta and signing new deals? I do think we will continue to see renewals pick back up, but this quarter alone in Q4, we did see new leasing activity. What was driving that in Q4?
Yeah, I think that is a fair question because that's notable. But I think mostly last quarter, it was probably driven a lot by some of the last mile in e-commerce demand, getting ready for peak season kind of in November and December. I'll be curious to see if that, with that piece probably out of the picture in Q1, if, some of those more automotive manufacturing requirements that we saw a ton of in 2024 that kind of really stayed on the sidelines in 25, if those kind of come back to start the year strong.
So kind of moving to the vacancy side of things, metro-wide in Atlanta, we actually saw vacancy decline in Q3, and I believe in Q2 we were at 9.5, so it kind of plateaued for a little bit, and now we're seeing it start to decline. We're at 9.1%. We don't have a ton of supply coming online next year, and development activity is picking up at the same time. Do you foresee going into 2026 vacancy continue to decline for the first half and then trickle up as new supply comes online, or do you just continue to see vacancy decline?
Yeah, fair question. I think you're definitely going to see downward compression on vacancy, mostly because, like you just said, there's very minimal product delivering. A big piece of the equation is with the amount of roll, how those tenants coming up on those leases with significant base rent increases are doing. But assuming they're doing okay, they're going to renew at the end of the day, then I think you're going to continue to see downward compression. And we say this every day to occupiers we're working with, but if you're under 50, 60,000 feet in most of the submarkets across Atlanta, you don't have much of anything to look at right now. And so it's easy to look at that 9% rate as a tenant, vacancy rate that is, and say we have opportunities. But when you really peel that back, there's not much to leverage.
Yeah, and kind of going back to the rent side of things, since 2021, I think we did a study and rents have actually across the board, every property type increased by at least 70%. We are seeing rents in Atlanta still continue to rise quarter over quarter, but it's not at these huge jumps. Do you think rents seem to be normalizing again after this big run? And how are landlords adjusting to these expectations?
Yeah, they're definitely normalizing. I think the way they're adjusting, and we've had a little bit of time 2 years ago, I think when things started to cool off a little bit, maybe 18 months ago, a lot of those MLAs or market lease assumptions were way out over their skis for a lot of asset managers. And so we've gotten to the point now where, we've had a year and a half of that. And so going into 26, I think a lot of those asset managers have been in a position where they've underwritten something a little more reasonable. And so with that, they're able to kind of have a little more flexibility to kind of be deal focused and be able to get deals done. They're probably still protecting their face rate. They're probably a little more bullish on abatement. But I think that's a big adjustment, whereas they kind of had a bit of sticker shock going out of the gate, seeing maybe what their expectations were versus where the market was.
Yeah. Thank you so much for being here and doing a quick market overview. It's super important to stay up to date with the market, so we really appreciate it. Kind of going into next year, what's one thing tenants or owners should be paying closer attention to that might not be obvious when looking at the data?
I think it doesn't sound like a new concept because we've kind of talked about it a few times now in your questions, but I think it's generally that you have to pick your moments for leverage. For the majority of tenants that are rolling, because there is such a footprint of renewals coming up, you have to pick your moments because they're fleeting for leverage in your renewal conversations. Because if you're in a well-located building in a submarket of Atlanta that your space is not overbuilt, there's not too much office, there's not challenging loading, then that owner's probably going to be pretty hard to work with. They're going to be working with you in good faith, but they're feel good about getting that space back. So I think when you have that moment of leverage where maybe you did find a competing space that makes sense to move, leverage it. Because we may not see that much into 26, into the latter half of the year.
Yeah.